All right. So U.S. dollar, natty gas. Okay, so U.S. dollar turning back up over the moving average. Sure. What do you have? 10-period moving average. All right, so we'll move it up. It's not really. Well, I'm going to treat it as a sideways on a support level for right now. Natty gas, whatever. It landed on the line. Okay, whoop-de-doo. So what do you have to? So what do you got going on here? I look at this as this is the first wave. We're correcting in here. A couple ways of looking at it. You buy something anyway, right? You're buying on that's fine. You're buying here, but you want something distant. I don't know. We'll have to go through and look at the spreads. See, I'm debating if you want to buy in August or you want to buy in November kind of thing. You should actually buy the shittiest contract and the best thing, right? That would be January or something. It'll have some premium in there. Okay, so this is on the front end. So this is March, whatever. Here's 30 cents. Here's 30, 40 cents. Do we take this out and go lower? That's this. But one, you're landing on the old moving average, whatever that's pointing that way. This is the bestest looking pattern. I'll say at best it's sideways. We're hoping there's something to get down here, and I'm assuming that this low will hold. All right, so what I'm looking for is there to be some sort of selling down here. So you can buy whatever here, buy a summer month. I guess you could say, I could say like buy in August, and then when you get down here, August, September, and then down in here in October, 240. So buy like a September, then an August or September, October, and then down here, November kind of thing. Or January, if prices get it, but these are the front month prices. The back end are sticky. Right here are little back ends. Here, our back ends. Your back end. Here's F. Here's January 18. Symmetrical little triangle bugger here. Like I said, if the drought's on its way or whatever, swing. What's this one? This is March. See, this is March 17. April. May, what do we have? August, May is not as much, but August is. So August, September, October, August, no, that's November. What are we in? August? Oh, there's no September in here. I have to change that. November, December, any of those. Okay, so it's the following year. All right, so skip the May here. It's like August, October. I'll have to check the seasonal on the August one. Whatever, all you're trying to do is shave a couple of pennies, just in case. I'll treat this as a larger sideways pattern, but look at this for January of 18. It's holding. Nobody wanted it. Oops, okay, hold on a second. Let me think this one through again. Whoops, let me think this one through again here. So it's one of those deals that we're trying to fight, and that's why it's holding up. Hello, I want it too, Yes, whoop, yeah, next one. Here's the Russell. Okay, so we have the ADX and the Bollinger Band is reset here, ready to go. Russell, right? Yeah. ADX, Bollinger Band, locked and loaded. They're ready to turn up on the breakout. But like I said, all the other ones are they're up there too. So do they reverse it? And this one just goes up. Does all the money flow into this? We know that the NASDAQ is outperforming all the rest of the indexes here. Now the other little guy here is going to jump on board. So these are going to be all your tiny stocks and stuff, right? This is, I guess, it's 2,000 small cap. I guess I could scan through those individually. Oh boy, that'd be fun, right, Kev? I suppose, since we don't have football going on. But we have Kev. It's time for the Kev season. Locked and loaded, so this is ready to go. So you play the long side on this one here. Trailing stop on the little pink dots on here. but worry about any type of breakout. Second mouse thing, it breaks on through, and then all of a sudden something comes out of Britain and it dips down real quick and touches. You want to be in then? Well, a lot of people are going to be resting there. They're going to want to support it. What do we have back here? So we marched higher. We came back in, right? We came back in. We'll say that it supported it. Came back down, back up, and then reversed. What was the move here? So 1260, 1270. Here was 6. That's 60 points. 55, 60 points. That's not bad. Back up. What is the daily chart? Same type of deal. You break on out of here. You break on out of here. You come back. This is a huge deal. Think of all the people that bought in during this time. They went to work and whatever. They contributed. I bought. Kevin says the market's going to double. I bought. I had no choice. I can't do this in my account. Whatever. I had to buy. Right? People still have to buy. Little pink dots, the breakout here, right? So we got a breakout. Now little pink dots behind it. You could actually just follow this one. It should be good to go. Both sides, trade both sides. It doesn't make any difference. You're just going off of the signals. You could have one where the Dow's up 10 and this one's just flying. But you're gonna get the volatility here because all the computers, all the options, all this stuff, everything's gonna widen now. There's gonna be a new trading range. If all you sold was calls here and puts here, you're gonna be in a new trading range. So the deal is you can watch this thing. I guess, this is on a daily basis, but now you can break this one down to, because what do we know? We had a larger sideways pattern and something big's going to happen. And a larger sideways pattern, it broke down. IWM, same thing on a daily. Here's a larger, this is logged, right? Yeah, so this is a larger degree move. Okay, so now with the side, the angle of ascent should increase. Here's ADX and everything all reset too, right? Money flow came into this and then kind of got scared out of it, so money can come back into it. You're getting a hook here, I think, on the MACD, and your stochastics are hooking up here too. So it's kind of like they got snookered here, but now you're poking through. But like I said, be careful. Just, draw a trend line underneath here, go with the little pink dots, and dealing with the breakout. Weekly here. So it's been trending for a while, and then we went sideways. Okay, so we're trying to break on out through here. But like I said, if it pokes through, doesn't make it, and comes back in, you have to be careful of this because all of these people are now underwater. And this didn't hold. So now all of a sudden you begin to cut into a lot of this. So this little area, just think of this as a larger area. 2 years, you have multiple years of this stuff. You come up through here and like I said, looking for R2, there's 75. Kevin, it's not going to go to 75. We just saw a chart. What's 10%? 13. That brings us down to 120 something. 20% is 26. 105. Here we go. 10%, 20%, 30, 40%, whatever. They're just I'm just lining them up here. Little pink dots, good to go. Little pink dots. It's on a weekly. That's fine. You're watching for if this thing, it goes vertical up, hooks, your angle of ascent, 30 degrees, 45 degrees, 70 degrees, and all of a sudden it starts going 90, Holy buckets, he passed the bill, the budget. Woo! We're all going to get paid what we're worth. Oh, okay. So much for globalization. Quickly run to the store and buy all the cheap stuff you can, right? Because it's now going to be made by America. No, it's not. It'll take By the time we get, even if the rethinking of factories, you know, uh, super fun waste sites come to mind. It's no. But I do respect the mixed economy here, a little bit of that socialism, but some of that communism. Look at what we did. Ta-da! Jobs. 2 bottles of vodka a day. Okay, Briggs at low. So up to a 10-year. This is a TNA and a 10-year. All right, this is the Briggs at low. I'm going to assume that this will hold for at least another 60 years, 90 years again. All right, just like the last one. Okay, Briggs at blah, blah, blah. I'm taking it as 1, 2, 3, 4, maybe a 5 swing up here. This will really mess stuff up with equities here. Because then all of a sudden you're earning 3.4%. And you're like, your little dividends, well, I'm only getting 2.8, and it's going the wrong way. Right? You're not going to be buying utilities, if you're getting 3.4%. That's the swing I put on it. I looked at this first as we were trying to make the load on here, and I'm like, God, it looks like this. So those C waves, we're trying to hope, on some of the debt, we're trying to get down here. What is that? 2 and change, whatever. Something happens, it spikes. Just be waiting. You put your order in there. It's a 1-day deal. Just somebody hits the computer and they go, oh, well, the trade stick, whatever. I don't care. I don't care. You just want to have your order waiting there if you want to short it to go up to this away. I don't think this is like an ABC pattern here. It's just the way it's kind of behaving. I'll take sideways. Sideways is fine. Sideways is fine compared to up. I'd take sideways to down versus interest rates going higher. Interest rates going higher, that would mean that then we're going to probably get the push in commodities lower. I want to see volatility. That's how when the charts are kind of, I want more of that NVIDIA and Cliff and all those good ones out there. Gasoline. Now we have soybeans and corn on the short side, I think, here. But we shall see, won't we? Here's the dollar index, all right? So here's 12 and 13. Here's where it's 70-something, 78 and stuff on here on the screen. Down below here is the Russell, the correlation to the Russell, the NASDAQ, the SPY, and the Dow. Okay, so this is the correlation to all of them. So if the dollar is going higher, strong correlation, so are stocks. All right, so I guess you could say if this goes higher, so does the stocks. Things get kind of goofy here because they go, wow, this is really going to F up my quarter. And what do you know? Some of them in 2014, a lot of stocks peaked. Remember, they just weren't able to handle this. The negotiated contracts in here, and then the companies couldn't buy dollars. Okay, so here's a sideways, right? Sideways. We're going to get a trend to break up. Now this is real. This is serious negotiations and all this other fun stuff, because this was one way of buying American stuff. This was now things are beginning to go a little differently. Our bacon costs more, that kind of thing. But I was landed on pivot. This is weekly. Landed on pivot and poking it up. The next level's up here. What do we have over here? It's about 102. And then the regular pivots are 106 and 111. The thing here is I'm just going to treat this as kind of a sideways pattern for now. You do have, what's this green guy? The NASDAQ. Okay, so the dollar came off the NASDAQ, went higher. That's what this is saying, the divergence part of it. Okay. Didn't correlate. The dollar went down and, All right, so what happens when we had some correlation breakup before on here? 14 and 15. Here's 16 on the equities. They reset. A different correlation here in 18. So this is the low. Wrong correlation. Dollar came off. Equities went up. No correlation. Lots of correlation. No correlation. All right. So like I said, it's the dollar. I'm going to treat it as sideways. The game is up, but I'm looking for an end game on this. I'm not saying it has to go to 120. I'm not saying that, for all I know, it double tops up in here and then comes back into here for a while or whatever, or comes down below here on, that kind of thing. I mean, in relationship to how far we've raised interest rates and where we're at, in relationship to how far we've raised interest rates and where we're at, we'll just call it even Steven. This is the dollar and the Wilshire. Okay, so this one goes back. So here's where you buy the dollar and sell the equities. Here's 1999, 0001 and stuff. So, right, the dollar was higher because of Clinton economy and raising of interest rates. Dollar was higher under Clinton, 120. Okay, so we come on down. This is the commodity cycle. The dollar came off. Then equities tanked. Then we worked our way back out of the strength in the commodities, right? So this is long the dollar, short stocks. It didn't work out, so you want to be short the dollar and long stocks. Okay, now we're getting the sideways thing again. So now what do you do to buy the dollar and sell stocks? Stronger dollar, higher interest rates. Interest rates compared to the stocks. You know, some of this paper, it's going out a few years. I mean, if you're only earning, if you're in dividend stocks, utilities, and somebody offers you, 3.4%, you're only making 2.8, and you look at it and go, well, I get this locked in, but I don't have to deal with the capital loss if the utilities roll over. Bingo. You're going into utilities for the freaking dividend anyway, right? You're not going in there for the capital gains, but hey, think of the utilities as your home in 07, 08, 09. So here we get a sideways pattern again, maybe something like this. All right, so you buy the dollar, which is be higher interest rates, and sell stocks. That's all this is that ratio. Value line, arithmetic index, blah, 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 yada, yada, yada. This is just a different way of saying Dow Jones and Russell and S&P 500 and, value or Wilshire 5000, that kind of thing, which is fine. It broke out. That's what long sideways period for 14, 15, 16. We finally broke out of it. Okay, so they broke out of the thing. The deal here is that the next one down here, I think the geometric is a little bit different on here. Okay, the average stock price, that kind of thing. So here we basically have a double top. Now I'm going to assume we're going to break higher because I'm going to assume the Russell's going to come with. I'm going to assume the little pink dots come with the party here. How long it lasts, I don't know. Maybe it'll last, 1 day, 2 days, 3 days, or it might not. We may roll over on Sunday. But the pattern here is that this would swing higher here too. Is that now we're beginning to get more of a broader based movement, which would be obvious because we're going to supposedly invert ourselves into the center. We're going to focus on ourselves and be selfish, which are fine. I don't care. That's the economics that use that the government gets involved when the economy stalls. We still have people lying on the couch, but we're quote unquote at full employment. Okay, so we need to do something here. We need to get those people out and get them into the economy too. We try as much as we, however we want to do this. Yes, the swing higher. Here's it on a daily. So it's doing the same thing as the NASDAQ, right? Value line, geometric, yeah. So as the Russell. Same thing as the Russell here. So it's trying to break out itself. All right, so it's had a pretty good move, correlation with the NASDAQ here. Now it's doing the Russell thing. Isn't that quite the interesting deal? Geometric, value line, arithmetic, and geometric. Read up about them, and then tell me the difference. And it just comes down to, it's kind of like a aggregate macro type deal of the market price, stock price versus, like market capitalization there's an infinite amount of cash. Yeah. So when you start pulling money out of the system by pulling money out of the system, then there's a shortage of the money. So it increases I won't go into it, but the deal is the money has to land somewhere. If it lands in the equity market, and there's not enough of it, and I need the onesie twosies to come in and buy it. You're not moving it by blocks. Institutions. All right, here I have the bullish S&P 500, those stocks in bull pattern, point and figure bull pattern. And here is the volatility divided by the S&P 500, 3-month VIX. So this is the VIX of the S&P compared to like the VIX of the OEX, the VIX of the VIX of the VIX of the NASDAQ. 10-4. All right, so this is just a ratio, but what I liked about it was the swings. This was the January, February swing of 16 from the low. We moved up. This is the Brexit dump. This is the election dump. Okay, these are our running corrections we had underneath. We poked our head through. We have this, but what I'm looking at is the same type of deal here. All right, then I also, besides running that, I ran a correlation of that VIX to this, and on a daily, it's beginning to cross over. So what I'm getting at is that the S&P may be poking up, but your underlying issues aren't coming along for the ride. You're not, you made a new high with 500 issues. The next day you made a new high with 497, 496. You get to a part, which is a taping point, and you didn't realize this. The taping point here is August and September post-Brexit. And this was going on behind you. If you weren't indexed, you would have known this. You would have said, "Why is the market at a new high? New high up in here, new high," and my stuff's going the other direction. It's just what you're in. All right. So then we get the election low. This is also, remember, the put call ratio was at an extreme, and then here's the same thing again. And all of a sudden we get the call ratios gets to be an extreme. So I'm looking for some sort of pattern like this, but like I said, with the blow off, we'll see with the dots and stuff. Here's Amazon. I thought this was just an interesting pattern. This is a 2-hour Heikin-Ashi bars on here. The money flow is in, or the unbalanced volume is in here. I think so. It's that grayish average trading range. I think that's what that is. The purple. Who are you? MACD average trading range. So our average trading range. So what's going on is this is a larger sideways pattern, and Amazon is going to swing. But what I thought was this was just one interesting pattern here. Is this some sort of broken head and shoulders right now? Money's in here. So, to me, do we see 775 in Amazon, or do we see, what is that, 25, 40, 20 above that? 865, 875. So is it 7075 or 865? That kind of thing on Amazon. Can I do this while I'm here? Yes, I can. 875. Okay, 875. 875. Or 775. Oh, you little bugger. Cool. This is just a scatter plot of the put-call ratio. It says total options against the market itself. I don't think this is a logged chart, though. But it's the whole swing thing. The whole deal is the swing. We're getting into the swing thing and the angle of ascent deal back again. And all that is just an opportunity if these guys are going to, if it's going the other way, these puts looking forward are going to get cheaper and cheaper. And that's all I'm looking for, is that we're playing musical chairs until all of a sudden we go, whoops, whatever, for whatever reason, whatever. Oh, hey, a 1% pullback, right? Isn't that the joke of the day? Now here, I thought this was interesting. Non-ferrous metals, I think that means copper. All right, copper, you saw the bar was it's poked all the way up to, well, this one didn't come with the ride here. And I'm thinking, okay, something silly here. It's a 2-hour chart, money flow, RSI, and unbalanced volume. I suppose these look pretty. Money flow peaked in on here, rolled on over, tried again. It didn't show. The unbalance is there. The RSI got oversold, but the whole thing was if copper comes off, this thing's going to come down. The CCJ. Here was my little back and forth with Cleveland Cliffs, correlation to the dollar. If the dollar, to me, I'm not sure if they see this. This is the bull market in commodities, right? All right, now we're just getting the bounce coming out. So, we're gonna this, that, yeah. Well, you've already moved, this is resistance. So to me, it's like, if you made your money in the put options on Friday on Cliff, you're done. You can walk away from this. I'm done. I went in and hit it, take your percent and leave. I'm not gonna, the deal for me is back here when we talked about it before with all of them, Cliffs again, correlation to, same type of deal. Just we're coming into resistance. It was support, now it's resistance. Someone said 27. I mean, the numbers were quite outrageous. What do we have down here? Correlation to the dollar. Okay. Okay, so here's Cliffs now. Okay, so, and to copper. So here's with correlation to copper. Strong correlation to copper. Copper comes down, right? Copper goes up, Cliffs goes up, correlation. Strong correlation to copper right now. Lots of bodies got in here. The fun one, though, was here's a weekly, is that the bodies aren't even in here, okay, compared to the peak. So it's probably non-believers like myself that aren't making this thing frothy, who aren't participating. Occasionally when you see institutional interest in something, you're not, why aren't they in Apple? Well, because they already played it up to whatever, and they got out of it, and that was their thing. It's, if you're put on a plan, and it reaches, it's mathematics, right? That's what these guys are doing with mathematics. You made X amount of percent, you got out of it, you're going to make the other, you're going to make another, 800% on this thing, right? No, this trade is done. In my eyes, that's what, you got a lot of volume, you'd be able to get out of it. But on a daily and stuff in a 2-hour, do I have it? No. Here's Noble Drilling, which I thought was interesting since it's drilling equipment services, blah, blah. God, I shouldn't even say that. But what it was is the unbalanced volume and stuff like this, and then you get the RSI at the 50. So maybe there's some sort of inverted head and shoulders. But the flip side was here's another one that was, $5 or $6 or whatever. Does it swing up in here if oil comes through, right? Oil goes up, they're going to put more pipes in the ground, right? So this is service, whatever. I don't care. Is there a C wave swing up to here? That was all it was. Take the money out of Cliff and put it in a Noble. It's kind of how I threw it out there just to see what anybody thought of it. That's all. This is the ratio of the two, right? So it's, if you obviously want to own Cliffs and not Noble or whatever, so it comes on down, all of a sudden it comes down and pops back in. So it's like, well, does it go the other way? So do you have Cliff come down for 3 days or something and Noble go up? Copper goes up and oil comes off. And this is long Noble and short Cliff. To see if it swings through here. I'm not going to watch it unless I come across it. Morgan Stanley. All right, so we're going back on a weekly chart here. Here's the money flow getting started. They broke up. Money came into it. Kind of did the peaky thing up in here in 15 and it came back down. This is $40 to $20. Okay. Now we're getting a swing higher, the angle of ascent, blah, blah, blah. It's, how much more of these banking, you have another 50% in there. That's fine. I don't care. It can go to 60. That's fine. It's only, to me, it's 50%. But for me, I'm looking at it as when it comes back through, this is, where were you in, 08 and 09 and stuff on this stuff. And now everybody's jumped. Everybody now is an economist. They know exactly what's going on, and you saw the frothiness here and you saw the frothiness here. And if this swings higher, you have our IPOs, you have your blow off, you have all this other fun. It just works for them. Well, we're going to have to create a whole bunch of construction corporations, United States for all these, blah, 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 my ass, whatever. Cisco, just to point out once again, this is what it looks like when you buy a stock, a hot stock, and then on the blow-off thing, and it comes against you, and you're like, yep, it's a great stock, 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 it's a great stock. Yeah, the #1 stock, just like Apple. Remember Cisco in 2000? For those of you that were 4 or 5, 6 or 7. Do you remember when you were a baby playing with the AOL discs? Oh, for shiz nizzle. All right, so this is Cisco all the way up. This was the #1 stock. It came out. It was dead money. When I talk about dead money, that's what this is. Oh, but Kevin, whatever. I don't care. You know, my whole thing was just this. You know, on the way, just tell people, you go, look, I opened up the history book of the #1 stocks, and only Exxon seems to string a couple years together. When you're the #1 stock, you can only go down. Cool. AK Steel, this goes along with your Cliffs and all that stuff, right? Bodies rolled into this thing. You know, hey, more power to you. Have fun. Natural gas. Bodies are in this here. Money flow came off the bottom. We're about halfway back, but it's like, you know, here's another 50 cents. So like I said, I'm treating this as sideways, but we're looking for areas to reestablish some distant contracts here. Because at some point, this is, you know, we're going to get one of these, you know. What are the lows? Here's a low going back. What's that? 1994, 1995. I mean, you know, do we come through here? I giggled and whatever, farted. Here's 79 cents. Go for it. Just bring it on. That'll be fine. Then I know I'm going to get what I want. I know exactly. Holy cow. Flush. It's kind of like trying to find a bottom in 12. God, look at that. That looks like cocoa, doesn't it? Ah. Right there, Kaplawi. Whee! And then goes and blasts through the other end. All right, Russell, blah, 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 blah. Russell comes up. We're only up to here, folks, right? What day is this? February. That's it, close. So we're up to the upper end. What happens? Can it come down to here? That's fine. What is it? 90, 17. It's 13 lower, so it's $650. We'll see. Or does it continue on this way? Well, we're definitely going to see. It's either going to go this way or retest and then go. You know, we will see. These are the Russell. This is a pullback on the way of the blow off. 7%, 17, 10, 13, 38, 12, 13. So even on the way to the blow off, Phil, on the breakout, right? You still had pullbacks. Like from here, you had from here to here. What is this? Weekly. So it was a 2-week deal going from 540 to 480, 50, 10%. So you had a 10% drop in two. Oh boy, right? 540 to 490. Was that 50? And we'll call it 8 to 10% in a 2-week period. Bango, gabango, gabungo. You broke out. You know, here's your breakout, right? Broke out, came back, tried again, came up. That was the end of the story. Up, down, up, down. Wow, that's some pretty violence, pretty much violence. That was Russell. SPX. Okay. Oh, I remember this one. The 3-day bull flag. It took 5 days. Okay, so that's the 3-day bull flag in December. All right, so blah, blah, blah. I come up to do the sideways thing. Poked higher, came down. Or now we're marching into this. The numbers I have, 23.33 and 23.49 for these on the daily. And then look at, like, I'll draw a trend line under this one, draw a trend line under that one. Overhead resistance kind of thing. Play it by 50, 30, 90. Well, I suppose you just play it by 16. ADX is turning up. We'll see. It just comes, it doesn't follow your, you know, I guess the pink dots aren't there, but just that's basically it. You know, ADX is turning up, blah, blah, you know, the sideways, it's beginning to get, but the deal is it's like I said, if it comes up to here, it's that the whole, you know, one-off deal, you know, and what happens there, then the guys can sell more VIX. You know, they're going to get conditioned pretty good here. Here's the pullbacks in the S&P, 11, 10, 13, 24, and 13 pullbacks. Here is GAZ, right? So GAZ, this is the the N to the U gas and D gas, it all comes off of this, right? This is how it's this is the number. So I just put up here, here's pivot, here's S1, so it's going to be a 17% drop. Okay, natty gas, we're basically here, right? So come down to S1. I think I call it 42, whereas this is 51. 51 to 42, or 51 to 60. I just moved it too far. It's pivot. This should be down here to pivot. Whatever line, it's basically in the center. Up, it's 21%. So U gas will go up 60%, right? Or D gas will go up, what is that, 45% or something, right? If the numbers are going to be off. So either way that natural gas goes, you're going to have 50%. So do you buy them both and then get stopped out at one at 20%? Those are other ways of looking at stuff too. And then you just hold you get whipsawed. But the deal is S1 and pivot here. This is 21% away, and on this one here, last time I played it was 40 cents, and I got out at 61. Or it was 61. I got out at 61. That's as far as I thought I was going to get up to here. Now we're back to this again. Now this is a pretty good reversal. This is a weekly. Yeah, it's a pretty good reversal on a weekly. So we're trying to, I should watch this one to see if it comes back down to here. Money is in it. ADX is ready to turn though. So yeah, the whole deal is we're going to get another any more time, are we going to be able to buy natty 30 cents lower? We're going to be able to buy natty 50 cents lower. We're going to be able to buy natty 70 cents lower. Or is it turn and run, and now you have to chase after it, and the angle of a cent will pick up? It's one of those you have to put a spread on, some sort of spread. Sell March and buy April or whatever, that kind of thing. March, yeah, we're going to have to roll out of that. So it's April over May. All right, here's the Dow Jones. I just put some cycles on here. Here's 99, 2000, 2001, 2002. Just some cycles. Bottom. So we're working on an upward one here. So how long is that? 1, 2, 3 years. 3 years. 15 is 18. That would be about right, right? Right. But it comes down to the angle of ascent here. This one, most of the time I go by price, but this time I'm also going to, what happens if we're up to R2 by April? That kind of thing. Because the angle of ascent is all of a sudden you're just it's one directional, in relationship to where we are in the past. Here's the money flow, here's the RSI, and here's the unbalanced volume. Your RSI or your unbalanced volume kind of correct through the money flow and the RSI. Same type of deal. How long does it take before stocks turned? 1, 2 years, 2 years and a quarter. So come here, 2 years would be 16 and a quarter would be here. Didn't get cracked, it got saved. The damn PPT. You bastards. Just what well, no, I don't think it's a counter cycle high. That'd be 2 moves. I'll have to roll this ahead forward, whatever. I don't know, whatever. Enjoy. What did I measure? I measured something on here to give me a number up here. I think it was this distance. And I just added it to the bottom, kind of like a blow off thing here. BSC, this is Bombay. I forgot to send this to the guy. See if it's going to go to here. I should call this BSC. Bombay. Okay, here's Swiss franc and the Canadian dollar long. So, the pattern just caught my, la, and so you might have an inverted head and shoulders here. Now, I know the Swiss franc's probably going to work this one. Canadian dollar's a little different, but it's been sold off or whatever. We've, yada, yada, yada. So maybe the CAD Swiss franc, just like some people like the Aussie Swiss franc. So I guess we need to see the CAD versus the odd. Here's the Qs, right? So we have, what's this orange guy? Average trading range is beginning to fall off here. Okay, what is this, the daily? All right, so we have, there's a money flow in the RSI. So watch your RSI divergence on a 2-hour intraday on the Qs. And then have sideways, breakout, come back, retest, angle of ascent, right? All right, now the angle of ascent is beginning to hook back on itself, 91 degrees. If this thing gets to 130, holy buckets, that's fine. That's fine, because if they didn't think it was going to see what was a 114 somewhere in here, 114, just some here, 1, 2, 3, 4, 5. It could be a 5-wave. This could be the middle of a 5-wave here. 1, 2. It doesn't make any difference, because then it comes down to time. If these guys are going to go straight up, I'll buy a 140 put, a 150 put, a 160 put, 170 put, that kind of thing, for as far out as possible. Because once it corrects, it's like holy buckets. Everything goes one way. Here it came up off the bottom and then traded sideways for a couple of quarters. Same time, even if it goes up and trades sideways a couple of quarters, we'll see. We shall see. But it's in relationship to where it was before. Here was unbalanced volume low. 105, 101, whatever, blah, 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 went up, sideways, and here we are. EDX is picking up here on a daily. That's fine. Then follow it. Put on your little pink dots and your little just trend lines on here, moving averages, whatever you want to have. My deal is it's where is in relationship to it is in the past. If I go in here and buy now, is that a smart move? Not really. But the smart move for me is I'm looking at it as buying puts on the opposite side of this thing for when the music stops. Does it stop in a year or 2 or 3? I don't know. But at least this is my plan. This is all blow off. This is one where if you've got crap in your portfolio, if you have the Qs, whatever. But like I said, this is a log chart. This is the angle of ascent. It's screaming. Now we're going to throw the Russell in there. Here's the copper here's copper. This is it opening on the high and coming off. Here we are at the low and going the other way. The other goofy one, here's another goofy one. JJC is the unbalanced volume the body's got out of it here. So I have to see if this is a runner. We might have somebody caught here. This pattern's okay. This part of it, the volatility was quite the extreme thing, and then we get like Friday's action. So somebody may be caught here in copper, or we need something fierce here. We need it now, not later. MDY, it broke out. Okay, MD, but in relationship to where it's been. Here's the ADX and the Bollinger Band, so they're widening. If you're in this stuff, sell April call, sell May call. You're selling a distant out. It's one of these things. How long have you been in this stuff for? You've been in it since the 70s and 80s. That kind of thing. It's just in relationship to where it's at. It's going up. You itching to sell some calls against it out of the money. 20%. So that's an 8% drop there, 6 to 8%. But it is, and we're in relationship where this is a good to buy the dip, and all of a sudden we're swinging. It's obvious to everybody, this is what we're doing, and here, it's one of those things. How long does it last? What happens with May, June, July, and August? What happens if something comes up? Here's OEF. I thought this was kind of a screamer. Here was the buy down here at 87, and here we are 10 whatever. Now we're at the other end. We'll see. Constellation Brands here. I thought this one would break, but if you don't see it on here, I haven't put it on there, but Facebook had the same type of pattern. The vertical trend line and it blasted through it. So it's like, okay, so some of these that broke the trend line then paused are now finding, takers. This I thought was interesting. This is Standard Bank. Opens higher and trades lower. You're going to get a hook like is this a daily? Like MACD up in here and, blah, blah, blah. But this is a Standard Bank. So this is British Bank, right? Standard Bank, this traded. But it was just the pattern. Came down and came up. And then this is like, well, this could be a bear flag. And this thing dropped to 750 pence or whatever. Whatever they're trading over there. So you just kind of see it's like, all right, is it breaking down here? ONCS, these little fiddle faddle things. $1.32 ONCS, $1.32. Hammer, this is a weekly, so this is kind of, you know, is it a possibility of going to $2, whatever. 60 cents on a $1.30 stock. Have at it. 30%, what is that? Or is it something more? Is it going to double? I don't know. But it's just the whole pattern here. Remember, if the OEX is going to, or the Russell's going to break out, a lot of this crap is going to come with it. You know, here's one here too. It just kind of scrape around the bottom. But the money's in here, though. It's almost like they're just accumulating for the swing. You know, 30 cents to 60 cents or something. Cyclicals gambling. I don't know. You got me. Here's the Bitcoin trend line from $20, $80, 160. So double. You know, whatever. SunQ, rock tumblers. Texas Instruments. I threw something out here before going into earnings or something chart wise. So here you have an ascending triangle. It broke on out. Now remember, with ascending with triangles and that, you take the mast. So is at 69 to 74 is $5, 5 is 79, and that's what you got. So you can take the mast on this here, the triangle, use it as measurer. You got that, and it came at, well, what's interesting for me is it lost this here. So the chips, they have to come into the chips here, but if not, the chips may be rolling over something fierce. Your NVIDIA comes to mind. You know, you can see the money flowing into this thing. They got caught. VRX, this is, I bet you, VeriSign, Valiant Pharmacy, whatever. Got that sideways thing going on. I'm sure it's going to probably bored people to death here. I'm not saying it's going to swing higher, but it's one of those that you're going to, you know, like here, you got one of those and then it came back down. You got an exhaustion gap, maybe, you know. And it's just, I'm just pointing stuff out. This is our XAU from gold. Do we swing higher here? It's at a moving average, so we're kind of at a crossroads with all of that. Is that it for the charts? Wow, that's it for the charts. So hey, I'm going to post this and upload, and then go take a download, and then I'll be back. Bye-bye.